Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you May the 5th, Tuesday, May the 5th, Cinco de Mayo, the year's 2020. Let's talk trading. We're going to talk about the trader's batting box today. And boys and girls and non-binary traders, remember these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. So back to the trader's batting box, and we've got Walmal on the line. How you doing today, Walmal?
I'm doing just fine. It's been a fun day. I've been trading. I haven't made goal yet, but hopefully by the end of the day I have. But I'm in a winning position. That's good.
Yeah. Well, as some of you know, Walmal used to play baseball at the college level. So I'm going to turn it over to him, and he can tell you about the trader's batting box.
Yeah, and TRO and I were talking about this a week or so, maybe a little bit longer ago about that. And the whole idea, in baseball, when a batter gets up, where's the first place he goes? He goes out into that on-deck circle, and he stands in that on-deck circle, and what does he do? He gauges what the pitch is thrown out there. He sits there, or actually stands there, and he's watching those pitches come in. He's watching to see what's coming in, what the pitcher is throwing. Is he throwing fastballs? Is he throwing change-ups? Is he throwing curveballs? Or whatever he's throwing. And then on top of that, what he's also doing, he's also gauging just how fast those pitches are coming in. Because if, you have to get ready for, how quickly that ball's coming in on you. And you'll see the batters standing in that on-deck circle actually taking swings at the ball as it's coming in, getting his timing down. And in trading, what we were talking about is this whole idea in trading where there's a lot of similarities to that with trading. Are you in sync with the market? Are you making your trades when you're supposed to? Are you prepared? Because if you're not prepared, you can go and just jump into a trade and, I know TRO calls it just airballing it, and that's just the idea. You're just jumping in because you see the market moving, I'm jumping in. Well, what was your reason for jumping in? Was there a valid reason to jump in? Or were you just looking for any excuse to get in because you want to make money? Or are you getting yourself prepared, and are you ready to go and jump into that trade and have your head in the right place? So not only can you get in, but you've got a trading plan behind you that will not only get you in, but it also gets you out. Hopefully it gets you out with a profit, but sometimes the trading plan gets you out in a place where you're preserving your capital as well.
Yeah, and so, that's talking about the on-deck circle, but when you step into the batting box, you're up to the plate. The pitches are now coming at you. This is where you have to execute your plan. Isn't that right, Walmal?
That's exactly right. So now that you're prepared to walk into that batter's box, okay, you're now there, okay? In baseball, in fact, in all sports, what happens is once you're inside that batter's box, okay, what has to take over is what we call muscle memory. In other words, you're going to react to what actually is coming at you. You don't have time a lot of times to think. All you have time to do is actually react to what you see. And isn't that trading? What we're doing is we're reacting to what we see. But if we've trained our mind and we've trained our muscles to go and react in a certain way, we will actually go and make proper decisions because we've trained ourselves to do so. So in other words, if we've got a trading plan in that says, at this point in time, this is where I enter. There's no thinking about entering at that point in time. What it is I'm jumping in because my muscle memory says do it, because that's what my trading plan says, to go and do it. And while I'm in the trade, okay, things are going my way. I'm staying in the trade. I'm sticking. And I'm sticking not because I'm seeing profit. I'm sticking because my trading plan says to stick.
Yeah, and
my trading plan.
Yeah, go ahead.
Go ahead. If my trading plan says to get out, whether it's get out with a profit or get out because this is turning against me, whatever that may be, that's what you have to be able to do. And there shouldn't be very much thought process involved as much as this is what my trading plan says to do.
Yeah, so part of that is having your exit strategy in place, and boys and girls and non-binary traders, you've seen this screen probably 50 or 100 times. Your money and risk management, that's what comes into play, because before the trade and as you're entering, you're executing your method, whether it's a rat zone, the Walmal, wick zone, squiggly lines, doesn't matter, horizontal lines. You're taking your entry. And once you're in the trade, now it's time for money and risk management. And if your money, and if your money management is like Walmal's 10-5-1, well, that's what you do, period. Because if you start to make adjustments on the fly and they're outside your trading plan, that's when you start to lose it, and you can go on tilt real quick. So,
right. That's exactly right. In fact, I'll just give a personal experience from yesterday. Yesterday, market forces, whatever, ran it against me a bunch of times. I actually went and took a whole lot of trades, more than I like to take, but I took about 20 trades yesterday. And with taking those 20 trades, the reality is I wound up as a profitable day, but it was a long, hard slug. But the reason why it worked out was because I was following my trading plan, and I had the market go against me on a number of occasions, but there was nothing that I did wrong. The market just did what the market does. But because I had a trading plan in place, I was, at the end of the day, walked away profitable. And isn't that the goal?
That's definitely the goal.
It's the type of thing where, if I didn't have that trading plan in place, I would have been down. I don't know what I would have been, but I certainly would not be in a good place because, I would have been making decisions on the fly and airballing it on my entries, airballing it on my exits, and I just would have got myself into a mess. But and to be honest with you, I did make a couple of bad trades, but once I was in the trade, guess what? My exit plan goes into place because I'm already in the trade. Just because I made a bad trade and shouldn't have gotten into it doesn't mean that I immediately get out. Or maybe it does, depending on what you've written as your rules. Your rules maybe say that, hey, I made a decision to jump into a trade, and it was just spontaneous without going and actually having a trigger. And your trading plan may say, get out now, and just take that 1 pip or 2 pip loss. Maybe your plan says it. My plan doesn't say that. But, trade the plan, know your plan. It just needs to be, it should be something written down in front of you, but it also should be something that you just play by muscle memory.
Yeah, and that's really important because, in fact, before we were talking earlier today, before we started the video, and I like to tease Walmal because he got into a trade, but it really wasn't his Walmal trade. But then he was telling me all the reasons why he took the trade anyway. I go, well, that's not your plan.
That's exactly right. Now, in my defense on all of that is that I have been, just so you all know, I have been working and trying to learn a new method, just so I have a second method for no other reason, and that's what I was trading. But TRO didn't know the reason why I was jumping into that trade. He said, that's not your entry. Why are you doing that? Well, it was because I was using a different method at the time. So that's my defense on that. But at the same time, once I was in it, I had to go and trade it. I had to go and trade what that plan was. And in fact, if I had used my exit plan that I used for Walmal, I would have actually gotten out with about 9 or 5, somewhere between 5 and 9 pips. But because of the new thing I've been messing around with, I only get out with 1.5 pips. Full disclosure, because why? With that on the method that I'm using, with that exit plan that I have right now currently in place, that's what it tells me to do. Now, one of the things I'm working on is how do I consolidate those exit plans, because I don't want to have multiple exit plans. I want to have one exit plan, and that's what I've been working on. And maybe someday we'll get to the point where I figure that out and we can go and talk about that.
Yeah, but I've got the Walmal template up here, and you can see this hour, that first candle, it ticked it, but then it turned around, and that's the one Walmal jumped in on. But he always says wait to the second hour, but he was like using a different trade here, and so then here I think I jumped in at this point, and then I think we jumped in a second time after that, or at least I did.
You did. I did not.
Yeah, I remember I got 2 trades off of it. And the funny thing is, I was going in, looking for 2 or 3 pips. I got it. And sure enough, right after we both got out of the trade, the thing just took off like a rocket.
Now, do you get upset with that? Do you have Romo with that?
No, no Romo, no regret of missing out, no FOMO, no fear of missing out. So it's just the market, but you stack those 2 or 3 pip wins up one after another, and after about 3 or 4 trades, you might have your 10 pips for the day.
Oh, absolutely. Because the thing is, eventually you're going to go and the thing is, if you go and get 2 pip, you're talking about 6 pips there, and the reality is also on that, not only do you usually get a 2 pip, but somewhere along the line you wind up getting your 5 pipper or even a 10 pipper, but you don't count on it. You just know that there's a good chance that it's going to happen, so look for it. But if you see that because of your trading plan it's not going to, get out. And if you go back and look at that 10-5-1 video, you see, well, I'm shooting for the 10, but if I get the 5, I'm moving my break even to get to the 1 pip, and if I stay above the 5 and I get to 10, what I do is at that point in time, I'll either take my 10 pips off, or if I feel confident in a trade, I'll stay in it and hope for a little bit more, or I'll just jump out at 10, just based on what I see. And that's the part there. Is the market still going up, or is the market starting to peter out on me? If it's petering out, I'm getting out, grab my 10. If I think that the market's not petering out and it's just taking a breath, then I may let it run against me. But then I'm down to 5. So that's how you have to go. That's how I play it anyway. But everybody's different, and everybody's got to figure out their own exit strategy on that.
Yeah. So I just put up the simple price action screen here. You can see we had a 3 ball at the top of this big red candle here on the pound, and a 2 ball at the bottom. So it was like giving mixed messages. But so here, in fact, I think Walmal put out on the, he answered a question. Somebody said, what do you use as a bias? H1 candle color. H1 candle color at the line. I mean,
right.
On this method,
yeah.
it's simple, and you can just look at the chart and see it works. It works over and over and over again.
Yeah. And the thing is, I think what I actually said to that fellow is that, it's H1 candle color, but I will go look at the H4 because I don't want to go and trade into a bulldozer, But for the most part, it's just H1 candle color.
You call it a bulldozer, I call it a freight train, like, Wile E. Coyote standing in front of that freight train gets run over.
Yeah.
Or actually, I call it a steamroller too, because sometimes he stands in front of the steamroller. So freight train, steamroller, bulldozer. Okay, we got a new one. And then just looking here at the template that I call the map now, you can see here we broke through the previous H4 high at the 72. Its price is now at 79, moving up to the trying to make a new daily high here, and pretty much covering all of yesterday's candle. Oh, and in case you're wondering, here there's 4 instances of TRO HL5 on this chart, and that's how I can have the H4, the D1, the W1, and the monthly, all those lines. And what I can do on, I have these so they're always showing, but what you can do is in the indicator there is an option to only show, where is it? Only show near. And then you can only show the ones that haven't been crisscrossed. Okay, where is it? There's so many options here. Only show near, false. So if I turn that on, it'll only show if price is within 10 pips of that particular of the lines that it's plotting. But boys and girls and non-binary traders, the fastest 15 minutes in trading is up. I hope you've enjoyed today's video. Maybe you learned something. Maybe you can put something in your trader's toolkit there. But you have to remember one thing. It's not what you trade. It's how you trade it. So go out there and drain the banks. And if If this is your first time watching, click subscribe and click the like button, everybody. Thank you.